right, we're going to go ahead and talk about silver, sort of the topic of yesterday, definitely going to be the topic of today, down 18% from its recent intraday high of 49.82, where the gold-silver ratio was about 32, meaning it took 32 ounces of silver to buy 1 ounce of gold. Now, the lowest the ratio has ever been was 17 to 1, but that was back in 1980 when the Hunt brothers manipulated silver up to about 50 bucks. Now, a lower ratio means higher silver prices. Now, the recent correction, however, is saying that a lower ratio won't actually last. Now, a few times in the past couple of days, gold has actually rallied as silver tanks, which is a pretty bearish sign for silver. Adrian Ash, head of research at bullionvault.com, a bullion dealer, told me that the divergence in the spot market has happened less than 14% of all the trading days since 1968. Now, if silver and gold are re-rating their ratio, some experts are looking for 60 to 1, which is the average over the past 10 years. It's right now about 37. The idea would be that silver would fall and gold would go back to the driver's seat and outperform, be the leader. Now, futures market is interesting. It's definitely favoring higher gold prices with the market in contango, where further out contracts trade higher than the spot month, whereas silver is in backwardation, which means traders are kind of stressed about a supply crunch and are moving the spot market higher than the contract furthest out. Now, contango is actually the norm here, and if silver reverts to that, then that's another catalyst for prices actually heading lower. So with the possibility of silver, I use the word tanking a little loosely, and gold outperforming, do you want to buy gold stocks? Typically, they offer a nice leverage, right? 2 to 1, perhaps. No, except they haven't in a long while. Now, the GOX gold index is down almost 4% for the year compared to the gold spot price, which is up 8.64% for the year. And not only that, but all of the 12 stocks in the GOX are in negative territory for the year except for 3. Harmony Gold up almost 17%, IM Gold up 8%, and Gold Corp up 14.5%. Now, the Gold Corp reports after the bell today, and they had a blowout fourth quarter earnings to become one of the fastest growing large cap miners out there, and the company has to deliver today, has to produce gold at low cost and be on target to increase production by 60% in 5 years. Now, keep in mind, though, that the stock trades at 12.7 times current EBITDA, almost double some of its peers like a Barrick and a Newmont, so you are going to have to pay up for this growth stock. And we will get to the pre-earnings Gold Corp trade and the rest of your Wednesday hump day stocks right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trades from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses